The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
The Producers Price Index is out. Wholesale prices are up 0.3% in November. That's 0.1% higher than expected. What does this mean for the crypto markets? Well, let's find out. Joining us now is Matrixport Head of Research and Strategy, Markus Thielen. Good morning, Markus.
Hey, good morning. How are you?
Good. Happy to see you. So we see that the Fed's preferred measure of inflation, the PPI, came out higher than expected. Now, we've talked extensively on this program, and obviously everyone has been hearing how inflation is still up, but the Fed we might have turned the corner, or we might be seeing a slowing of the inflation rate, not a deflation rate, but a slowing of the inflation rate. Do you think that's necessarily going to be the case, even if we did have this slightly higher than expected number? Or do you think that ultimately, we might have lost control here, or the Fed might have lost control still?
Oh, definitely not. I think it's just a matter of really how deep we're going to fall in inflation. I think you can easily paint a picture that inflation is going to fall down, back to kind of like 3 to 4%. I would say within the next 2 quarters, and of course, this is going to be like a massive tailwind for risk assets in general. I think it's just we're coming now into like a period where there's some tax loss selling for stocks, so people just kind of like harvesting, the losses, so they need to pay less amount of tax. But I think coming into next year, inflation is very, very likely to fall, quite aggressively. I mean, we just had like the lowest inflation print since February, basically, that the first time that we dropped below the 8% level. And I think if we're going to see inflation falling to kind of like 4%, I think that we can easily see, based simply, for example, how oil prices are actually now at a lower level than they were like 12 months ago, despite, of course, the constraints and the war in Russia. So I think you can really make like a picture, paint a picture with the midterm elections that we had, that the Fed is probably going to turn more dovish, and I think we have seen already the first indications that Powell has turned more dovish. And I think the whole risk of higher inflation is really like the story of this year, and we have to look into next year now.
Is the era of 2% inflation over?
The era of 2% inflation, I wouldn't think so. I think it's just really like a matter of where we had like kind of like a perfect scenario of like massive money printing. So we have seen the Fed printing, I guess, like 40% of all the money they have printed over the last 250 years, really just printed in 2 years. So there will be a little bit of spillover effect into next year. But I think then we're going to fall sharply down, and I think we're going to come back to a period where where we have the scarcity of assets, where the scarcity of yield products. So I think this is just like a short-term, period, really, based on all the stimulus packages that we have seen, really from I guess, the COVID stimulus packages, and this has come to an end now.
Now, when you said that you expect the Fed and Powell to be more dovish, you're saying just not as hawkish as they were before, right? You're not saying that all of a sudden they're going to, maybe look at QE again or something like that. Those days are gone, no? Or do you think that they might, start printing even more? I just sort of want to make sure we're saying exactly what you're saying.
Well, I think for the next 12 months, it's probably like unlikely they're going to print more money. But I think, come really 2024, I think the whole story is going to come back, again, that, people are aging, there's no new countries going to be built. I think the last time we had like a massive inflation, peak really was, I don't know, let's say was like kind of like 2007, 2008, when of course we had like the whole massively building up China. And I think in the 70s, what people kind of always like tend to miss is that after the war, it was really like the baby boomers, like 30 years later, that caused like a lot of, the inflation. I think this is like, there's nothing on the horizon now where a new country basically has to be built with the size of China. So I think it's very difficult to see how we're going to have like a massive capex and that's going to drive inflation or something. So I think what we're going to have next year is like inflation is going to come down quite aggressively to kind of like the 3 to 4% level. And then gradually it's going to be in 2024 when inflation is going to go back to 2%, if not even like lower then. So I think that's really just the spillover effects that we're like working with right now.
Does some of that change happen because also too we're talking here about monetary stimulus or soon lack thereof, but the fiscal stimulus side of it as well in the United States, with Congress now being divided between Democrats and Republicans, Democrats barely holding on to the Senate, Republicans holding the House, and Democratic president, that actually gridlock is good to stop any additional money printing, any additional borrowing, and the need ultimately for money printing that would ultimately stop this. Do you think that that's kind of a factor playing into this?
Yeah, I mean, normally the third year is always like the best year for risk assets. That's usually when the S&P performs, the best. And I think that's what we're going to enter into next year. And yes, gridlock has always been, very good for markets. But even when we saw, last time, kind of like 18 months ago, there was not really a lot of demand for more stimulus because there has already been so much stimulus injected into the economy. But of course, over time, the picture is going to change again. And I think there's just a clear like demand for, to provide more stimulus eventually. I mean, I think a lot of those topics are just naturally going to come back again because what can people invest in? We had like really the last 6 months where people were really praising the oil sector because of the lack of investments and everything, and oil prices rallied all the way to $130, $140. But we are now at $72, right? So we are a lot lower than really what people estimate. And now, of course, people are already calling to be short energy again. And I think if you want to have an inflation hedge, I mean, all these inflation hedges are not working anymore. When you look at, for example, data on Zillow on rent prices, I mean, they have peaked apparently out already in February and are coming in now quite sharply. So I think all these signs except maybe Manhattan. I mean, Manhattan, but that's affecting
the overall rent. It's affecting the overall rent number because so many of the rentals are in Manhattan.
Yeah, but I think, Manhattan was also a little bit late. I mean, there was really this, everybody wanted to leave and everybody wanted to, to live in Colorado or something, right? Everybody wanted to work from home. But I think people also realized it's going to be very difficult. But I think, it's actually a very good example because you can already, say and see that some of these old themes are coming back. People want to work in teams. People want to work, in the city. People want to work in teams. I mean, all these stories that, that we thought that, it's going to be a game changer. Everybody's going to work, on Zoom and everybody's going to have this great life. I mean,
Markus,
this is all changing. Yeah.
I want to jump in here and switch gears, talk about some cryptocurrencies. One that we're watching is FTT, surging 20% over the past 24 hours after Sam Bankman-Fried tweeted his support of a plan to restart FTX by issuing a new FTT token and giving it to creditors and depositors. SBF was tweeting, "I continue to think that this would be a productive path for parties to explore. I hope that the teams in place will do so." What do you think of that strategy?
Yeah, I think this is a perfect, second leg of the scam strategy. I mean, we had this in Russia before. In Russia, we had an exchange going under, in 2017, with $4 billion being basically stolen. And then, shortly later, the exchange was restarted by the main administrator. And, you might recall the WEX tokens, WEX. And then another $450 million were left and stolen. And I think here is very similar. I think the brand is just extremely tainted. And I think when you look at the history of exchanges, it's really exchanges seem to have a shell life of 2-3 years. I mean, there's really numerous examples. All the leading exchanges are literally in business for. Binance was started 2017 basically, and then really became big, I guess after the COVID crisis, and that's really when their market share went up a lot. And before it was BitMEX, and before there are all these other exchanges. So I think the investors have really shown that once they have been really scammed out of a project or a protocol, that they just move on to the next one. And I think here is a little bit very similar. I mean, otherwise. Who's going to really build this up really from the ground again?